Welcome back to Income Trading 101. Today we are going to look at Starbucks, and this is being recorded at the end of the trading day on February the 5th, 2021. So just taking a look, I like to pull all the data back and see in general where we are. And we are trading at highs of Starbucks, right? Starbucks is trading, I think it finished the day a little bit over, let's see. Let's look and see, just so I'm not making anything up, get called out for it. Looks like we closed at 106.48 today. Pretty high number. The high of the day was 107.54. So we're at all-time highs, which obviously is going to skew the way we analyze this data. Things like, just right off the bat, things like Fibonacci retracement are less relevant because the last pullback that we had a 100% retracement, and we are well through that and above that, so we might be able to analyze a little section, but that's it. I'm gonna go ahead and scroll back in. I tend to one of the things I like about TradingView, and I know some of you are looking for a good trading package, charting package. I love that they put these earnings dates down here, so I can see that Starbucks had earnings back on January 26th. That was about a week ago. It came out 3 cents lower than their expectation, roughly 3 cents. So it's just nice to have that. And I also can tell just by this standard pattern that Starbucks should have a dividend coming up. You can see after these earnings dates, a dividend was about a week later. So they should be having a dividend coming up. So I'll keep that in mind with my stock analysis as well. Aside from the activity back in March, back in the when the world ended, when the markets really tanked due to the pandemic, coronavirus pandemic, there's high volume. Otherwise, the volume's been relatively steady, kind of steady eddy. So I don't see a whole lot of reason to analyze that. You guys have heard me say that before, so I'm gonna go ahead and remove that. Cleans up my chart a bit. So let's start off like we always do with a little bit of, we're gonna do a little bit of moving average analysis. So I'm gonna add in some moving averages. And if you watch these videos, you know that I tend to use three. I'm gonna use a short term, a near term, and a longer term. So and you really, just as a side note, if you are using these for trading, you really need to adjust them to your own trading style and how long you intend to hold, the investment, right? So that matters a lot. These are not magic numbers. These are numbers that are relevant to my trading style. So I use a 10-day, which is a 2 weeks, 10 trading days when we're looking at 1 day data. And then I use a 20, and then I use a 60. So the 20 is a 1 month, the 60 is a 3 month. So right off the bat, you can see that you had the interplay that happened last year with the pandemic, where everything headed south for several weeks. And since then, there was a period where the short term, near term, and long term were sort of playing. They were close with one another. But since then, for the most part, we've been in a decent upward trend until recently. We recently had, let me zoom in on this, recently had a crossover of the 20-day and the 10-day. So whenever this red line, I like having my medium, my 20-day in red, because typically green means buy, it's going higher, red means it's going lower, so that's my sell. This would have been a nice little sell signal, and but the problem is, look at what happened over the last week. We've had a pretty strong, and this would have been shortly after they had their earnings on the 26th. We had a gap lower, and then it's spent the week rising back above both we're now actual price movement is higher than all three moving averages, which means that these moving averages are going to change. So one of the things that I've said before in video is that these moving averages can jump around, and the visual of them can lead to mistrades, trades that you wouldn't have done after looking at them. So I actually really do prefer to calculate these on my own. It makes it a lot more clear. I can always look back and say, what was it that I saw? Because I know that with a couple more green days, the actual slope of these moving averages is going to change on the chart. And so I might look back and say, well, I don't know what I really was seeing. Why did I sell that? But with the actual data, when you can say actually on this day and on this day, your near term moving average was higher than your short term, and that's why you sold. It really helps you to really hone in and create a better trading strategy, a better trading analysis for yourself. So charting tools are great. However, you do want to, especially on the simpler things like a moving average, it's good to keep track of them yourself. So that's it. It doesn't hurt as well to go ahead and flip. We can flip into some different time patterns. So if you look at it on the 1 hour, that gives you a little different analysis. The 1 hour shows that this is much more of a buy. So if you're trading short term, whether that's a 1 week, a 2 week, or even less, the 1 hour might be a more sensitive and more relevant pattern for you to trade. You would have looked to buy sometime around that 101, 102 level, and you might have locked in $4, $4.50 over the last week if you were trading this. So that's it. That's why it's so important to make sure that you look at charts that are based on your time frame. If you're a short-term trader, if you're in and out multiple times a day, 1 day charts don't really do it for you. But these 30-minute, like right now, this is a 30-minute chart, 30-minute signal. A 30-minute chart had a buy signal back in early February, right, with this crossover between the short and the medium term moving average. Even if you had closed out around here, you would have locked in a profit or maybe put in a stop loss rather than closing out. But this here in early February the 4th, that was a clear cross because actual price movement. So one of the things I like, it's one thing to have the moving averages signal, a crossover and a buy. It's another thing when actual price movement crosses higher than all of your moving averages and actually crosses the averages, the average lines themselves, and goes higher. So this would be a great signal, and we'll see if we're going to give this just a little pullback to go higher or not. So let me flip it back to, I occasionally look at the 15-minute too, for those of you who are trading ultra short, in and out in 1 day. So let's move it back to the 1 day time horizon. And we're going to move on to my second favorite of the analysis tools, second favorite of the indicators. Sorry, I'm moving the graph back out to a 1 year time frame. And we are going to get rid of this moving average and take a look at the MACD analysis. And the good thing about the MACD is it does use moving averages, but it also puts them in a format that makes it easier to see changes in momentum, strength and momentum. And the challenge here is that we've had a pretty significant uptrend all year long. So when you've had one-way markets, it really makes it difficult to make this chart. It's like at what point do you buy and sell and all of that. So I think the MACD works better in more volatile stock, but this has been a pretty consistent rally, so we're not going to harp in on that one. And also, as I mentioned earlier, the Fibonacci analysis is much less relevant. Even, let me zoom in on 2021. Even for this little pullback and we've almost had a 100% retracement. So Fibonacci analysis ends up being much less relevant, much less useful. And the goal of technical analysis truly is to find tools and views that are going to be useful to you. That's it. They need to be useful. And if you see something that makes it easier for you to trade, that's of value. So there, I was able to draw one pretty simple trend line, and look how in line we have all of these previous lows. I'm able to fairly easily, except for this one that happened in September of 2020. These others, line up pretty well, right on the same slope. I mean, that's doesn't get much better than that. And I'm even going to delete this for now, and we're gonna, rather than use a straight trend, we will use a channel. And you guys will hear me talk about this charting software. This is part of the reason I like it. I have so many tools right at my fingertips, right? It just makes it so much easier to get a good analysis, a real analysis, of a stock. I don't have to use multiple tools to get the views that I want. I'm able to look at Fibonacci. I can do my moving averages, my MACD, several other things. I can create trending channels just to see what's going on in this stock, and are we in fact expecting higher. So if I were to look at this channel, we'll expand it out. I mean, this might tell me that the upper end of this channel appears to be right around one. And it doesn't help that there's a let me pull this down a little bit. There we go. So I've got the upper end sitting right around 112. So maybe that 111.50, 112 range is where Starbucks stock is heading. And then if that's the case, there's another $5 in this stock that we might be experiencing here in the next few weeks. So we'll see. We'll just keep an eye on that. But I love technical analysis because it gives me some good visual tools that I can use to try to understand what's going on in the market. So I'm going to tighten this up a little bit. There is such a thing as overfitting. People who do research are aware of that term, statistical research, and that's where you try to fit your model too closely to the data, and it makes your model actually less relevant. But if I were to do something a little closer to that to try and account for the various tops, that would actually have me looking closer to an 11.25, 11 half. I'm sorry, 113.50, $113 possible top in this stock. And there are only a couple times, where with this tight channel higher, only a couple times have we gone lower or above it. So I don't want to overfit the model and start to imagine things being visible that aren't, but I do want to get an idea, an indication, that's it, an indication of what to look for in the future of this trade. And it definitely looks like Starbucks is going to be going higher in the coming weeks. So might be a good buy, maybe call spreads, that sort of thing can be useful. So that's it. Thank you guys so much for watching. Feel free to subscribe, hit the notifications thing as well, so you know when I make a new video, and share it with a friend. All right, have a great weekend. We'll see you next week.